All right, Sanjeev Bhasin joins us now. Bhasin Saab, good morning.
Good morning, Nikunj.
Nothing good about the morning when you see a global queue like this. तो केवल morning ही बोलते हैं जी, good morning ही बोलते हैं.
Correct. Fifth day of 5 days of fall, and the sixth day also looking bleak. But Nikunj, this is where perennial bottoms are made. This 18,900,
Bottom बन जाएगा कोई.
19,100. These are levels where you want to buy the index. I would say that we are very, very oversold. All bad news is more or less in the price. Results from most of the counters have been better than expected, but you will have to watch out for yields and the flow of money into back into fixed income. All that gets into prices. I still think that India is set to outperform in this month, and it is just the impact of earnings, the feeling of missed out, which a large part of the foreign investors have, who will be coming back. So keeping my optimistic view, I think next week onwards, we start to trend upwards.
What have you bought in this fall, Bhasin Saab? Monday, Tuesday तो छुट्टी थी, चलो अच्छा था. छुट्टी नहीं होती तो market और गिर जाता. Wednesday, Monday and Wednesday when the markets have fallen, which are the stocks you've bought?
Yeah, so as a disclosure for our clients, we have bought Reliance, we have bought Axis, we have bought ICICI Bank, we have bought some Geo, and we have bought IGL in this fall. We think a large part of the discounting of future growth of 2025, 2028, all that gets into the price. So these are some of the counters where we are aggressive. In the next 2 days, we will accumulate. We have advised clients to accumulate on the indices now. Bank Nifty and Nifty are giving very good entry points. They are more or less close to the bottom. I don't know, 100 points more can easily come because of the fear and the expiry today. But I think the index itself is very well poised. And we think that this month, index is going to outperform the mid caps and the small caps.
Vaishali, I'd like to draw your attention to banks. They were underperforming and they are outperforming this fall. So are we at that turn where banks may actually lead the recovery?
So I would go stock specific actually. HDFC Bank is on everyone's radar, and I don't see, it's coming towards double bottom at the most, I think 1480. So that would be one of the stocks. Axis Bank holding on, but I would say that better level would be to buy and decline, because I'm still not convinced. Market shows a lot of fatigue, exhaustion right now. And I would still say that Bank Nifty needs to correct by 500 points from here on. So Axis Bank also at around 920, 930 would be an ideal level to get into. And the other banks, comparatively, I would look at Federal Bank still holding on well, not getting corrected in spite of all this choppiness. So that is one stock which comes on my mind, because the inherent strength is visible when market is really falling. And these are the stocks which I would really look at.
There's one stock which I'm going to ask everybody to comment on, and that is BSE. So ladies, please look at the charts. We don't track that on a daily basis. But Bhasin Saab, I'm going to put the chart of Bombay Stock Exchange. It is standing tall. It is standing tall, and that is yesterday's price action. But in this year, Bombay Stock Exchange, hello. Bombay Stock Exchange is up 2.2 times. What is happening there? NSE is the dominant exchange. NSE has more than 75% market share. BSE is just about made a comeback in the options market, but NSE is really the big, dada there. What has changed for BSE? Why the stock has made a comeback?
So firstly, Nikunj, the NSE is not listed, and if you wanted to play a listed exchange, you have the MCX on commodities and you have the BSE. Secondly, I think their aggression towards options and the derivative side on lower entry fees and so on has seen a good response. And thirdly, there is a flurry of primary market offerings which are in the offing, which will obviously have NSE and BSE both as a conduit. So I think there has been a value chain, and like I said, intermediaries, brokerages, exchanges, AMCs, insurance, these are very good conduits for the long term. You don't have to think more bigger than that, because the flow of retail flows on the SIP, on the cross-selling, on the AIF are very, very strong. And that is going to continue despite the market being high and low. That is what my call is. BSE has been a very, very big outperformer. But that's the reasoning I would give, that because of no other listed exchange on the equity side, that has gained in parlance on volumes and on the new products which they have launched.
Sony, what's your sense? Bombay Stock Exchange. It's a liquid.
Nikunj, technically, if we see, I feel that it is, obviously on a very good uptrend, and it has made its 52-week highs around 1828 odd levels. I think technically it is still poised to test 1900, 1950 plus levels before seeing any sort of profit booking taking place. There's still a lot of steam left immediate current levels to that rise. So we may not get that dips to enter, for trading perspective. I think 1950 or so levels is the one place where we can have some profit booking, and the dip that we get from those levels would be an ideal level to re-enter, for a trading perspective. So I think that's how the entire structure of the chart formation is looking quite strong for these stocks.
That's the view coming in on the charts. Unfortunately, no more rounds of opinions on that stock because we've got the management of Tech Mahindra here to talk a little bit more about the quarterly performance. Joining in on the show, we've got Mohit, who is the MD and CEO designate, and Rohit Anand, the CFO at Tech Mahindra, joining in on the show to give us a sense as to what the outlook is for business. That's Mohit Joshi as well joining in. Good to have you both on board. Thanks so much for taking time out. Rohit, I'm going to start off with you. The last 2 quarters have been challenging without a doubt, but what's the outlook for the next 2? Is there going to be recovery on the cards in the second half or only by FY25?
From a second half perspective, we see, while the deal wins, you see this quarter has come back, right, from last quarter. So there's a positive improvement. The pipeline's positive. But for that to convert into revenue, I think will take some time. So for now, I think the second half looks, from a demand perspective, will continue to be challenging versus seeing a rebound. From a margin perspective, as we look at defining our core in terms of what we want to focus on in terms of geography, service line, products, areas of focus. We'll continue that exercise that we've done this quarter into the next quarter as well before we get to a baseline view towards Q4. So I think that's the way to look at both revenue and margins.
Okay, so Rohit, I just want to get in a follow-up. Does that infer that then revenue will likely change, will likely continue to the declining trend then for the next 2 quarters and margins aren't yet at the bottom?
No, so let me clarify. Maybe I'll take the margins first. So margins, the bankruptcy impact was last quarter. That was the exceptional item that we shared. This quarter, the impact is 140 basis point is operational drop basis, utilization reduction and revenue drops that we've seen based on the demand environment. 260 basis point is one-time exceptional item, which I was addressing to as, what we've terminated, closed and deprioritized as a business, more around certain regions that are not fitting as a long-term strategy, right? So that's a part of that. We'll continue to do that exercise towards Q3. So that's kind of on the margin. In terms of revenue, as I mentioned, the second half right now, there's less likelihood to see a rebound given how we're seeing the deal conversions to revenue in terms of lead time. It's more, and we don't really give a guidance, so I won't give you a specific number, but it's more attuned towards a flat to a slightly downward trend right now.
Mohit, explain to us the rationale for restructuring, the cost and the revenue synergies. How do you see they would kick in?
When we did the reorganization, we wanted to build a more streamlined organization. We wanted to get some of the benefits, so from a delivery perspective, there were really 3 objectives that we were looking to drive, right? One is Tech Mahindra is known for service resilience, for the quality of the work that we do for our clients, and I absolutely wanted that to stay rock solid. So that was one clear intention or one clear sort of design element behind the new organization structure. We also wanted to continue our tradition of service line innovation, so to drive a lot more service line innovation within TechM. And finally, clearly we have to have an eye on our margins, and be able to drive the margins. And I feel that this new organization structure from a delivery perspective is able to give us that resilience, increase in service line innovation, and improvement in margins. From a market perspective, wanted to consolidate the sometimes overlapping sales organizations that we had from a telecom and a non-telecom business perspective. So really saw benefit to combining those two in Europe and in Asia Pacific and Japan. And in the US, again, we had a mix of a geography and industry-based go-to-market, so to consolidate it and to make it vertical within North America based organization structure. Wanted to build out a clear consolidated marketing organization within TechM. And so I think these are some of the design choices that we made, which I think will help us drive innovation, improve margins, and improve growth into the future.
Okay. So Mohit, what's been your assessment of demand in various verticals and the budgets for CY24 basis your client conversations?
So look, I think it's hard to say, and I think the picture is more nuanced based on the industries and based on the geographies. So first of all, I think the telecom vertical or telecommunications globally has been the most impacted sector, right? And this is true not just for us, but for all of our peer group. But some other sectors where we have strengths like manufacturing or the emerging strength that we have in healthcare, these sectors have been more resilient from a spend perspective, and I suspect that that will continue. From a service line perspective, again, cloud remains an enormous driver of growth, and we've seen this in Microsoft results just yesterday. I think generative AI gives another significant boost to the industry. So you might see, quarterly or even half-yearly sort of turbulence or ups and downs, but clearly in the long run, right, the future of enterprise software and providers like us is extremely bright. I'm very confident that given our deep and historic strengths in telecom and manufacturing and the emerging strengths that we have in other sectors like financial services, like healthcare, the deep presence we have in our North American and European markets, but also uniquely the presence that we have in Australia and Japan and Asia Pacific should make our business more resilient into the future.
All right, Rohit, lastly, the deal wins have been very strong this quarter, but going forward, how are you looking at the deal pipeline and the funnel shaping up?
Yeah, so look, I think on large deals, I do believe that again, we have a strong engine that we're going to work to strengthen. I feel the new organization structure and our vertical focus within within the Americas and the reorganized structure that we've built in Europe and APJ, and the fact that we are now going to be organized vertically from a delivery perspective, should mean that our track record on large deals should continue to stay strong. Again, large deals, as you know, there's a lot of volatility quarter on quarter, but I am very very confident, just given the fact that our pipeline has stayed strong through the cycle.
All right, gentlemen, really appreciate your time. And with, I can tell you that everybody in the market really wants to see that how things, in a sense, under your leadership would actually change going forward. But in Tech Mahindra, right now, the opinion is that Mohit will change things. It's a business where if the rate of change is even decent, the impact on the big picture would be a far bigger one. For Tech Mahindra, even though it's a Tech Mahindra Group company, Basin Saab, their margins are low, their growth is low, and if things change at the top, could Tech Mahindra be the turnaround story of 2024?
Very possible, Nikunj, but numbers are flattered to deceive. In fact, HCL Tech, Persistent are two stocks which have outperformed. We own Tech Mahindra. We have been having confidence in the management and the change and the turnaround. And we know that these two seasonal quarters have been reasonably struggling for most people. But we like you think that there could be a turnaround on the management and the type of whatever I could hear on the type of growth outlook they have, the type of business opportunities which they are and they are searching for. It will take time for materializing. but those could be a big trigger. The stock is relatively one of the more inexpensive stocks if you took the large cap. And I think that any decline maybe today and tomorrow because of the results, little disappointment, should be a buying opportunity. But keep a vision of at least 1 year, because there will be this transition, the deal wins, all will take time to play out. However, I think that because of investing in people, in the projects, there will be most of the cash outflow may have been done with, and you could see margins actually accrete on the upside. So buy on decline would be a good strategy on Tech Mahindra. It's a blue chip to own.
Sanjeev, good to have you on board. Thanks as always for joining in and running us through a plethora of stocks that you believe investors should be buying and what your long-term outlook is. Let's bring on board Hemang Jani as well, who joins in. Hemang, so much to chat about. Why don't we start off with those numbers coming in from Jubilant Food? Brokerages are maintaining a hold or an equal weight rating, but they say that the weak demand environment will continue to weigh on margins and earnings growth. Is that what you're also fearing or worried about?
Yeah, so if you look at the performance, versus the market expectations, there is definitely certain amount of disappointment that we have seen. And to that extent, in the current climate, the stock should see a little bit of a negative reaction. And if you look at the management commentary, they are expecting about 5 to 6% kind of IFL growth for Domino's in the long term, and about 150 to 200 basis points increase in the EBITDA margin. There have been cut in the earning estimates across, and the overall CAGR, growth that one is building in is about 11 to 13%. So I think the stock should underperform in the current scenario because of the high valuations and not so great operating performance.
Hemant, wanted to understand, morning firstly, if you've taken a look at the Honasa IPO pricing, seems reasonable, the parent of Mamaearth that is, long awaited. There were a lot of concerns about the valuation the company was quoting earlier when they did plan to IPO. Having said that, they're still loss-making. So just wanted to understand, you think investors would tread with caution, especially given the past experiences we've had with some of these fancied IPOs?
So I think if you look at the sentiment around us, the companies which are delivering good performance, they are getting beaten in the current scenario. So I think the appetite for any IPO, particularly in the loss-making ones, I think is pretty much non-existent. Even if they have reduced the pricing, the fact remains that it remains a big loss-making company, and I don't think one should really look out for any kind of a short-term listing gain. Yes, once the stock is listed and if you see at a very attractive price, maybe at that time one can relook at it, but clearly it will avoid at this point.
Which is more like a buzz, but something where sources have told ET now that Cipla and the Torrent Pharma deal may not happen. Now, markets had questioned the management of Torrent Pharma in the con call over the weekend, and they said the following, that we are committed to not dent our balance sheet we are not going to dent our balance sheet, and we will not have leverage which cannot be managed. The numbers what they've given looks like, if you put the numbers together, looks like the deal actually may not happen. Also, ET now has been reporting, especially Anurag Joshi, my colleague, has been reporting that there could be a rift is not the right word, but there seems to be a disagreement between the promoter family of Cipla, the Hamid family, as to what the right value of stake sale could be. So looks like the Torrent Pharma or the Cipla buyout has run into rough weather. Blackstone was the first one which had thrown their the ring in the hat, but then they backed out. The only entity left in the race was Torrent Pharma, and looks like there could be a disagreement between the promoter family, which is the Hamid family, as to what really could be the right value for Cipla. Especially Torrent Pharma yesterday went against the market. It was up to 2.5%. Do you think the stock could be a contra buy in this choppy market?
Well, that's what I just recommended this morning. I think this stock is ready for an up move. But of course, one has to take calculated risk because yesterday we saw that it made a low of 1820 and then again shot up to 1950 level. So technically, purely on technical terms, I would say 1870 would be the near-term support stop loss right now. And if things go right in the right direction, I think 1960 would be the trading target. And of course, positional trade could be even higher, going towards 2000 perhaps.
Right. Hemang, has the time come to now start buying into IT? I mean, even Tech Mahindra's performance was disappointing. The visibility as well, what the management has indicated, seems to be at an all-time low. Is it now all baked in into the stock prices, you think?
I think even the way the US markets are showing, sell-off and weakness, and particularly the IT sector there, so there is going to be certain amount of rub-off because of the way things are, going on globally. And the performance is also, if you see, majority of the companies, they have not really delivered that well. Yes, in terms of pricing, in terms of valuations, the companies are looking attractive, but one will have to bear in mind that this kind of a sluggishness will continue till we see some uptick in the data points in terms of growth and the overall tech spending sentiment. So if you have a 6 months, 12 months kind of a view, I certainly think that IT has entered that value zone, but keeping in mind that the near term will be clouded by what's happening around us.
BSE, Hemang Jani, what's happening in BSE?
Yeah, so I think these are some of the green shoots, Nikunj, that we have in an otherwise market which is completely, there is an onslaught which is going on. So I think very low floating stock. B, the F&O part, they are really clocking good volumes. The recent increase in the transaction charges also is something that will add to the bottom line in a big way. And, capital market play, you don't have too many options. The cash market segment also is growing. So people want some pie in that. And to that extent, I think MCX also has done reasonably well. So it's a small company where people just want to have some participation.
Okay, that's the take coming in on BSE. Let's just take a look at what the rest of the market has been up to. Well, of course, yesterday you had another weak session, as I guess how the start today is going to be. But metals did stage a comeback. What did not do well was some of the pharma, infrastructure, as well as telecom plays. So Bharti cracked quite a fair bit. Adani Enterprises, Adani Ports, both those stocks were lower, as was the case with Cipla, Divi's Labs, even other names like an Infosys, Bajaj Finance, Tata Motors, all of them did look weak. But the one sector which has been one of the best performers year to date, realty, that also has seen a bit of a crack coming in the last 5 trading sessions. Vishali, just wanted to get your sense in on where is it that you would recommending shorting at all, if at all, in the realty pack?
So I was looking at DLF also, overall reality, all these have got into a corrective move. So I would say yes, if you talk about overall, I will just give you the levels. Well, so we've already seen a downslide, but I would say that maybe 1100, a little bit of a bounce of say 1100, 1120 would be a good level to go on a sell strategy for a target of 1020.
Right. Soni, structurally, what's looking like the weakest sector in the market right now?
So if we look at, completely from the perspective of rollovers, we're seeing a lot of shorts coming in, especially in, chemical sector. I think that would be an underperforming sector that we can see. And stocks individually in that sector are also starting out with very aggressive short rollovers. So chemicals would be the weakest pack. There could be some outperformers such as metals, and pharma is in a mixed bag of sentiments. I think few of the pharma stocks are showing better rollovers than the other stocks. So chemicals and cement as of now are a little bit on the weaker side that I would put. Real estate, yesterday was the first day itself where it has showed a bit of short rollovers. We are yet to see how today's data shape up. So I think these 3 sectors would be on the watch list as of on the short side.
100 points lower is where the Nifty is likely to open. Not just one of those phases of the market where everybody wants the correction or everybody wanted the correction. Everybody, let's say 15 days ago, was of the view that markets are overbought, they were obese, mid and small cap stocks, avoid them. The problem is that when the correction comes, nobody likes it. So Hemang, 15 days ago, everybody wanted a correction. Now that correction has come, nobody wants it. Sometimes it's confusing, right? We don't know what we want.
We've all seen how the broader markets have delivered in the last 6 to 7 months, and it's very normal to go through these kind of sharp corrections. The only part where it's not that great is that Nifty, which has not delivered in the last 2 years. Even after very strong performance in previous quarter and even this quarter, by and large, the numbers have been in line with certain exceptions. So if you see another, let's say, 3-4% kind of a cut in Nifty, then it will effectively give you practically negative return over a 2-year period, which is not a great sign for active investor when you see more flows coming into the play. But I think we should not get too much clouded by what's happening around us. I think great opportunity is approaching us in terms of levels and valuations, and from a medium to long term perspective, we should look out for some great opportunities to enter.
Another stock which is worth revisiting, Hemang, is actually IndusInd Bank. In a year where most of the financial stocks have done actually nothing, IndusInd Bank has held out. I mean, on last count when I checked on Friday, it was up something like 17-18% for the year. Now 17-18% for the year, if you compare that with defense stocks and EMS stocks and railway stocks, may look like a massive underperformer. But the minute you compare IndusInd Bank with the bank Nifty, it is a massive outperformer. Last 3 or 4 quarters, they managed to get their act together. IndusInd Bank perhaps is the only pure play bank because HDFC Bank is in it is in insurance, it's in home finance, it is in just about every other major business. ICICI Bank, insurance, security business, they've got subsidiaries. State Bank of India, they have presence in just about every financial vertical. Axis Bank, well, they've bought into the Citibank credit card business, and they've also bought into, they are the majority owner of Max Financial. So some would argue that if you look at the top 10 banks in India, IndusInd Bank is the only bank which is a pure play bank. Hemang, has the tide genuinely turned for IndusInd Bank? Because it was really it was commanding a price to book of 4 times pre-IL&FS crisis. But right now it is available, the pure banking business is available at something like 1.5 times book 1 year forward.
Absolutely, Nikunj. I think if you look at the performance, this quarter itself, the PAT growth was 22%, load growth was 21%. You have a news whereby Hindujas are allowed to increase the stake. Also, a possibility of inclusion in the MSCI where the weight increase can lead to inflow. And amidst all the volatility that we are seeing in the banking names, this is holding out pretty well. So I do think that both in terms of valuation, in terms of operating performance and the short-term triggers, this is one bank which is looking quite attractive for even, let's say, short to medium term play.
That's the take coming in on IndusInd Bank, especially given its stark outperformance vis-a-vis some of its other peers like in HDFC Bank or for that matter Kotak as well. But the Hinduja Group is looking to hike promoter stake in IndusInd Bank and list Hinduja Leyland Finance as well. Let's hear out a slice of this very special conversation which is going to come up later on in the show today.
You see, the holding company of IndusInd Bank, which is Mauritius based, which I am chairing it, I see since last 1-2 years opportunity how we cover the full BFSI sector. And opportunity came of Reliance Capital. We bidded for it, and we have succeeded. It has been accepted by the COC and the administrator. It's now in the process. And we are hoping that this should come through by November, December this year. Not only what we cover with the BFSI, because with this we get 3 insurance entities which are operating. We get your security business, we get ARC with it. We also have an opportunity to go for the wealth management and the asset management. So with this, whatever opportunities further will come, which is missing in this. Once we have acquired this, the next step will be how to go for the digitization.
And you also said you want to build almost 35-40 billion of value under this bouquet.
Yeah, this is the plan by 2030, that how this whole sector we see can go for the valuation, which will touch around $35-40 billion.
And within your BFSI, you also want to list your holding company. What is the status of that?
Yes, that is one of the plan to list. Hopefully by mid next year, we will go for the listing so that our shareholders who are global high net worth shareholders who will get an opportunity to partly exit, generate value from it, and which area and where to get listed, that is under review. It can be Singapore, it can be Dubai, it can be Luxembourg, it can be Mauritius. So that is all under review.
I'd like to revisit Ashok Leyland. You just heard from the management. Ashok Leyland is owned by the Hinduja Group. Another company where the promoter has a large holding is IndusInd Bank. The third one is actually Gulf Oil. But in terms of India business presence, I guess large part of the business in India is, more than 60-70% I would say is actually IndusInd Bank. This year Leyland has also done rather well. Hemang, could Leyland be like a 2-3 year hold given the bent of the economy? Economy does well, trucks will do well. Or, it's a direct play, I guess.
I do think so, Nikunj, because within the CV space, Tata Motor is more like a global play, so you don't have any pure play, LCV with a certain degree of exposure to the EV part of it, defense part. So I think Ashok Leyland has been delivering a pretty good set of numbers for the past couple of years, and we think that the growth momentum will continue. So if you see any opportunity in terms of entering into it from a 1 or 2 year perspective, surely it will be a great thing to do at this point.
A bunch of other stocks which are going to be in focus, and Sona BLW has come out with an excellent set of numbers. There's been a margin uptick of about 300 basis points, revenue growth of over 20%. There's Chennai Petroleum as well, revenue uptick of over 12.25%. Margins as well have expanded quite a fair bit on a sequential basis, and we're talking about a 10.9% figure as opposed to a comparable in the previous quarter of a tad below 6.5%. There's Chalet Hotels as well. The EBITDA has jumped up 48%. Revenue has seen a rise of about 27%. CMS Info Systems as well. And then, of course, there's Sonata Software too, which has come out with its earnings, wherein the revenue has seen a marginal uptick of about 5%. And margins have come in higher by about 150 basis points on a sequential basis. So these are a couple of green shoots, if you will, within an otherwise bleak market. Having said that, of course, we've been talking about as to how Tech Mahindra is a disappointment. There's Jubilant FoodWorks as well, wherein the management commentary as well is very weak. And they're talking about as to how customers are now downtrading when it comes to their orders. There's Indus Towers as well, which hasn't quite matched up to what the market was anticipating. The margins have come in at 48.5% versus 49.7% on a sequential basis. So these are a couple of disappointing stocks that you may want to look out for as well as some of the movers. But Hemang, just wanted to, get your sense in, and just picking up from what Chalet Hotels has delivered in terms of their quarterly performance, where within hospitality do you still find opportunity to maybe add afresh to the positions or even buy afresh altogether?
Performance this quarter would be good across most of the hospitality names, and the next 2 quarters are going to be extremely good. So we think that the best to participate would be Indian Hotels, followed by Lemon Tree. I think these are the 2 names where you have a fair amount of growth visibility because of the kind of expansion that they've undertaken and the fact that this is going to continue. So the stocks have corrected in the past few days. So these are the 2 names that we prefer at this point.
Let's get in some mid-cap trading strategies as well going on that note. Soni, let's start off with your list first.
Right. So first, I think in the mid-cap space, what we can see is, I don't have a lot of options from the F&O space, but perhaps in mid-cap, IT is somewhere I can see a bit of momentum taking place. So persistent would be the first, pick that I'll have from the mid-cap IT space, especially or purely from technicals and derivative perspective. I feel that above 59.50, it'll give you a fresh breakout and head levels for 6,100. So that can be a target, and it becomes a conditional buy. Just wait for 59.50 to cross, and you can keep a stop loss of 58.80 only then when it has reached that level of 59.50.
Get in the a mid-cap recommendation from you, Vaishali.
So I would look at a cash counter. I mean, it's Sadhana Nitrochem. Yesterday we saw, I mean, after a good consolidation, and yesterday we saw a very strong candle formation with a very high volume. And of course, chartically, it favors the pattern is quite, no, it is Sadhana Nitrochem. It is the price is 91 rupees. So Sadhana Nitrochem at 91 rupees, I would give a buy strategy on this with a stop loss of 84. I would look at a target of around 110, 115. This could be a positional trade. And the other stock, which, well, it is coming as a very, very short-term sell strategy. And I would look at Axis Bank, actually. So Axis Bank, I would be giving a sell with stop loss of 980 and looking for a target of 930.
All right, thanks very much for that. Let's move right on then and take you through some of the other top headlines that we're tracking. The Israel-Hamas war rages on even as the death toll has now crossed 6,000. The humanitarian crisis worsens in Gaza, and the UN has claimed that it will be forced to halt its operations due to several fuel shortages. Meanwhile, the Israeli Prime Minister has announced that his government is preparing for a complete ground invasion of Gaza. And at least 16 people were killed while dozens other were injured in shootings in Lewiston, Maine. These shootings took place across 3 separate locations in a bowling alley, a restaurant, and a Walmart distribution center in Maine's second most populous city. The hunt for the shooter is on while the authorities will be investigating the case.
And back home, toxic air once again has gripped Delhi NCR with the average air quality index or AQI in the poor category in Delhi, Noida as well as Greater Noida. Experts have attributed this dip in the air quality to festivals falling towards October end when meteorological conditions trap pollutants. Meanwhile, the Delhi Pollution Control Committee has imposed a complete ban on all types of firecrackers, including green cat crackers, till January 1st now, to curb pollution. Also, PM Modi will be visiting Shirdi in Maharashtra today, where he will inaugurate and lay the foundation stones of multiple development projects in sectors like health, rail, road and oil, as well as gas. He will also be performing puja and darshan at the Sri Sai Baba Samadhi temple and inaugurate the new darshan queue complex at the temple too.
All right, Hemang, give us a sense as to one top mid-cap recommendation that looks good within the broader markets.
Within the mid-cap space, we like Poonawalla Fincorp, which delivered very good set of numbers. And, within NBFC, this is one name which can grow by about 40% or so over the next 2 years. Apart from that, we can also look out for something like a Paytm because, fintech platforms are back in the vogue. Both Paytm and Zomato have done reasonably well. So if you see a small correction, I think these are the 2 names that we should watch out for. And I think apart from that, Sona BMW, which delivered a very strong set of numbers recently within the auto ancillary space with a focus on EV, would be one stock that we like within the mid-cap space.
Right, Hemang, great to have you on the show. Thanks as always for taking the time out and joining in. Let's just take some other stock strategies too. But before that, let's hear out a slice of market maverick Samir Arora along with Dinshaw Irani discussing their ways to beat the market, themes that would benefit in the long term, and lots more.
The central elections or the main elections, we don't think are equal probability binary events. But otherwise, they are binary. But the probability of there being a shock may be very less, maybe, I don't know, 10% or I don't know how. But if that came, yeah, that would be a big negative, maybe worth 15% on the index, which will then take you a year, 2 year to recover. But because the probability is not even, that way every event in life there's some probability of things going off or wrong, yeah.
If you would have launched this fund in December 2020, in the despair of COVID, that time markets were not cheap, but they were super cheap. It is like saying gold was available at a price of silver. Now, 24 karat gold is available at a price of 22 karat gold. And in some pockets, gold is trading at a price of diamond.
But actually, if 24 karat gold is trading at the price of 24 karat gold, that is also okay. In the sense, when people buy, they buy it at the market price and whatever that be.
No, the margin of safety, is it there, right?
The margin of safety is in the fact that the market or the economy or India in the past has been growing at 13-14% rupee term returns. So unless you find specific reasons that because of that something massively wrong has happened on valuations, plus minus the market will do that only, and then we are supposed to do whatever we can. But the idea that you should have bought in 20 or many people say I bought it in COVID, that can't be a model for a fund because those events come every 7-8 years. What do you do for the rest of the years? So broadly the starting point, if at all, would have helped those people. But what about the people who would have bought 1 year later? It's an ongoing game that equity does better than debt and equity does better than gold. And once in a while it doesn't, but in the long term it again does. And our job is to try and outperform that index.
Chalo ji, khana aa gaya. No sharing.
Normally I would have had 2 gulab jamun. Now you force me, I'll have half.
4 तो total है. तो आपके 2 इनके मेरे को क्या मिलेगा? You bad reputation, Parsi. Oh no. I love that. तो आप थोड़ा मैजिक ट्रिक करते हैं, गुलाब जामुन याद करो.
Okay. Sony, the pre-open rates are indicating that we could be in for a weak start for Jubilant Foods. We could be in for a decent start for Axis. Looks like it's going to be a weak start for the Bank Nifty also. So what is the first trade you will punch in 4 minutes from now?
So I think I would place my bets on, IPCA Labs. Yesterday, even in the choppy markets, it held on to its gains from the previous day. So I think IPCA Lab is poised to head towards 20-30 odd levels, strictly from a trading perspective. And keeping a stop loss of 985, you can look for those targets. I think 1020 to 1030 should be the ideal target point ready.
Sony, good to have you on the show. We'll let you go on that note. That's the technical opinion coming in from Sony Patnaik. Bracing ourselves for a weak start for sure. And, I guess the bigger question is, Nikunj, yesterday we had the call that don't buy the fall, let the dust settle down. Does that call still remain? Because you've got expiry as well. And it doesn't seem like, the global markets are going to settle anytime soon. It's not a today, tomorrow scenario. It's going to take a little bit more time. Even the valuation comfort for India markets as well to come in, we've still got some more headroom on the downside. So do you buy the fall just yet is the question.
See, Ayesha, sometimes no action is also a good action. And I think we are in that phase of the market. We've been maintaining this view. And I think I would, still maintain that view. What you don't want to do in this market is you don't want to unnecessarily be buying the fall. Similarly, you do not want to sell your good stocks because I've always said that, Indian market is in a bull market. In any bull market, corrections will come and go. Today we don't talk about, let's say, what happened in 2022 in terms of where the market was post the Ukraine war. We don't talk about it. Why? Because that's forgotten in terms of price action. Markets have recovered from that so-called geopolitical concern. Similarly, what we are staring right now, it could be just a minor fracture here or there. This is not the end of the road. So this dry patch of October 2023, weeks from now, not even months from now, would actually be history. So you don't want to sell your large core portfolio in this. However, in the small and the mid-cap stocks where valuations had become crazy, you want to wait and you want to understand which way the risk appetite in the near term would move. You just need to time yourself in slightly smartly. In terms of margin of safety, I would still say banks and pharma. Banks, private banks, pharma, selectively, especially pharma companies which have a US denominated business. Third, I would say you need to buy the hot themes right now would be manufacturing followed by defense, maybe to some extent power. These are three themes where you want to buy on a bad decline. But rest of the market, FMCG is expensive, IT difficult to call where the turn is, SaaS companies little bit here and there, capital goods stocks, they're expensive already. So the margin of the safety right now is not something which you would say is so strong that you want to go against the trend. You want to go against the trend where stocks have become cheap. Right now, 24 karat gold is available at 22 karat gold. That's hardly a bargain. That's more like an arbitrage. And you don't want, if you're an investor, don't go for arbitrage. 10 seconds to go, we'll get the first rates. Not that market's expecting anything large or big. 80 points lower for the Nifty, 250 points lower for the Sensex. So that kind of a 0.5% here is what you should brace yourselves for. It's F&O expiry. It will be difficult to call which way things would move eventually. First rates will just start coming up on your screen. It's Thursday. It's been a truncated week. So F&O expiry pressure would actually be concentrated today. The breadth is dented. Hardly any green on the screen. Tech Mahindra down, Mahindra and Mahindra down, Infosys down, Adani down, Bajaj Finserv down. Hardly any green on the screen. Look at two newsmakers actually, or I would say three. Cipla, then Jubilant Foodworks, and then third is actually Tech Mahindra. These are three stocks which are worth revisiting. Jubilant Foodworks down 20 rupees, Tech Mahindra down 35 rupees, and then you've got the price action which now let's look at some of the global denominated sectors, especially metals. They've started falling and they've started falling on strong volumes. Similarly, consumer tech and fintech, Zomato, Paytm, they have also started reversing. So it's a sea of red. And I hate to use the term, but everybody is running for cover in the mid and the small cap space, and suddenly there is no space to hide.
Yeah, absolutely. That seems to be the case. It's all falling down. Let's hope the selling actually abates after the wave today, and we're exactly in line with what the Nifty implied open was this morning. It is a 0.5% cut, and doesn't seem like it's going to get better anytime soon, at least. A lot of other earnings. Nikunj just flagged off Axis Bank, wherein the NIMs have actually improved 4.25%. Deposits have seen an uptick of about 18%. Axis starts off in the green, 1% higher there. Good numbers for Chennai Petro as well. The margins have expanded all the way to 10.9%. Revenue uptick of 12.25%. Although the stock has started off soft in a trade today. Chalet Hotels, the revenue has seen an uptick of 27%. EBITDA is up 48%. 1.25% higher for Chalet Hotels. Sona BLW has come out with excellent set of numbers. Margins uptick of 300 basis points. Revenue growth of over 20%. 2.6% higher for Sona Comstar as we speak right now. CMS Info, that also came out with its numbers. The revenue has seen an uptick of nearly about 15.5%. Marginal uptick in margins. Actually, no, margins have fallen on a year-on-year basis. On a sequential basis, it's a bit of an improvement. JSW Infra, and it seems that reports are doing the rounds that the company is in talks to buy SP Group's Gopalpur ports for 3,000 crore rupees JSW Infra marginally higher as we speak right now. And Sonata Software also came out with its numbers, as did Rallis India. So these are a bunch of other stocks which are in focus. Not a great quarter for Tech Mahindra, not a great quarter for Jubilant Foodworks, or for that matter even Indus Towers, wherein the revenue has seen an uptick of less than 1%. And margins have seen a decline on a sequential basis. So that's really the weak setting right now in trade as we speak.
Oh, yes, indeed. And that breadth really telling the story. The fact that it's skewed firmly in favor of the losing side. No surprises then to see that, we were talking about that 5-day decline for the broader markets. Take a look at it today. No different. The fact that there's that stark underperformance as well. Already 1.5% being shaved off. The key pain points being real estate. You've also got metals, media, PSU banks, and Ayesha, like you said, pretty much everything in the red this morning. Just going to highlight some of the other big drags in today's trading session. MMTC, Varun Beverages, Ircon International, Rail Vikas Nigam, Jubilant Food, of course, Kaplan Point, Jindal Saw. Those are under pressure. On the flip side, though, take a look at what's lighting up the screen. Chalet Hotels, Axis Bank, Sonata Software, IndusInd Bank at about 14.22. You've also got something like a Gulf Oil, which is up in trade today. So that pretty much sums up the market setup this morning, and on the brink of actually breaking 19,000 on the downside and just about clinging onto that level by the skin of our teeth.